Welcome back to Trading 360. It's time for the disruptors. And George Tsilis, senior markets correspondent, here to talk about Jabil, which reported its earnings this morning. What did you think? JBL, which a big move, up almost 15% now.
Yeah, I mean, it's actually a big move. There's a reason why. I'll explain in a sec why we're seeing such an outsized move in Jabil. But we got to consider what the company's doing. They're doing very well, obviously, in the last year. Absent today's move, they're higher by about 105%. They're basically a semiconductor capital equipment company. They manufacture and design specific circuit boards for end markets like industrial automation, factory automation, if you will, manufacturing, EVs across the board. And also healthcare is a big business for Jabil. In fact, if you look at their sales breakdown, about 18% of their sales are Apple, which is actually decreasing in terms of total exposure to Apple over the years. But nonetheless, it is a company that has a lot of widespread capital equipment applications. And it's in high demand considering we're seeing a lot of onshoring of manufacturing back to the United States. And I think this is happening globally. But if you look at the earnings, actually a really good report from the standpoint of earnings. They did fractionally miss on sales. They beat the estimates on earnings coming in around $2.45, beating the estimates by about 12 cents. And that was higher by about 4.7% compared to last year. But if you look at sales came in just a little bit shy of estimates at around $8.46 billion versus $8.51 billion. So they missed by essentially $50 million, but sales were down about 6%. But if you look at the guidance that the company provided for the next quarter, or Q1, earnings guidance actually rose about 6% versus a slight haircut on sales. And I think that's also one of the catalysts involved in why we're seeing the stock price higher. But the other thing is, if you go back just a day and relate that to the news today, just a day ago, the company actually spun off or sold off or divested its mobility electronics business to BYD Group of China, but that was for about $2.2 billion. But today, the company announced, and this is what I think is happening with the stock price today that's very meaningful, is they're increasing their share repurchase to $2.5 billion. So in essence, they're taking that $2.2 billion that they're earning from divesting their electric mobility business and using that to buy back shares. And if you look at the share count in terms of market capitalization at around 13.5 billion, that's about 18% of the float. So I think that's part and parcel of why we're seeing such a meaningful move to the upside. But I think also, irrespective of the share buyback, the company's growth prospects on an organic basis are quite meaningful.
Right, understood. So at this point now, with such a big move, how would you go about an example trade today, George?
So I think what's happening here is the institutions who are catching, obviously, attention to this news are slowly bidding up the stock, perhaps towards that 125 to 130 area. So I think despite the move that we've actually seen so far, if you look at it, for instance, on a 5-minute chart, they just continue to buy the stock to the upside. So in essence, we'll play a continuation of the trend. The other thing is, if you look at the chart on a daily using candlesticks, we're basically gapping higher above 52-week highs at around $117. So we go out to November with 50 days to expiration and place a long call vertical spread, purchasing the 120 call and simultaneously selling the 125 call, because I think the 125 area will probably be an area where the stock will stop, at least on an intermediate term basis. And altogether, this would cost a trader about $2 a share in debit, and that's your total outlay for the position. That's, of course, your max loss. But if the stock hits 125 or higher by expiration, the trader could earn $3 a share. So you're outlaying $2 to potentially make $3 here. Now, the stock has to at least hit 122 by expiration of 50 days because that's your break-even level.
All right. Thank you for all of that. A good look there at Jabil, formerly Jabil Circuit. Thank you, George Tsilis.